think what's put it on the back burner here is inflation. And what we kind of wanted to reach out to you and discuss today was the effect that inflation is going to have on the consumer. I mentioned earlier in the show that, hey, if you thought inflation was bad now, wait, because you got crude oil at $96, $97 a barrel. And this is going to hurt. This is going to hurt not only businesses, but consumers in general. What kind of data are you seeing as far as inflation goes? Because it's got to be off the charts.
Yeah, it really is. So, at LikeFolio, we're really not trying to measure what inflation rates are. That's for others to do. What we try to measure is how much the consumer is feeling that pain and how much the consumer is talking about their fears of inflation, their fears of rising prices, and how much that's impacting them. And, quite frankly, it's out of control at this point. We see the inflation fear index at LikeFolio at all-time highs and at levels that I honestly did not think were possible before we got into this year, up 387% on a year-over-year basis and just ramping exponentially. And what that tells me is that, not only is inflation very real and starting to hit people's pocketbooks in a big way, but also that the amplification of that message in the media and really everywhere that you look in the markets, the Federal Reserve notes, all that is really having a major impact on consumer psychology. And as you guys know, consumer psychology, consumer sentiment is one of the top forebearers of either good or bad economic times. And so when you see something like this, you kind of get a glimpse into what the consumer's feeling. And right now, that's really a very fearful state that their money is not going to be worth as much tomorrow as it is today. And the place that they're seeing that the most, and the most obviously is at the gas pump. And this is something we've been watching. We watch really closely at LikeFolio because people do complain on social media and in other places that we track about gas prices. It's one of those things that people kind of can't resist talking about. And so, we put this chart out, gas price concerns levels up 173% year over year, which is a really big number. But what really bothers me when I look at this is how sustained this high level of fear is around gas prices. The amount of complaining that people are doing about gas prices is, an indication to me, and the longevity of how long they've been complaining about it is an indication to me that it's really hurting the pocketbook. This isn't just people talking about, they're upset that the price spiked, before a holiday. This is people talking about this is impacting my life in a very negative way at least once a week. And so I think those two things, you've got inflation, you've got gas price concerns. When you put those together, the American consumer and quite frankly, probably the world consumer is just beaten down right now and looking for signs of hope. And so far, really not much of a lifeline out there.
Andy, when we look at inflation and the fears that are out there, you guys have clearly identified gasoline prices or crude oil or that relationship as the number one. Which is the number? What are the next two or three? Is it semiconductors? Is it used cars and trucks? Is it food? When we measure inflation, sometimes we break out food and energy. What are the other things? Everyone is pretty much dialed in on crude oil, and we're not going to get into how we can fix it. That's a whole nother show. I could spend the rest of the day talking about how we can fix it. But what are the next two that seem to be jumping up on your radar after the most obvious, which is crude oil?
Yeah, I would say number two is probably meat prices. So, not just food, but specifically meat prices, have really gone up. In fact, I was talking to a friend of mine that owns a restaurant, and he was talking about the amount of price increase in the food costs that he has had to absorb without without reprinting that menu and raising prices on customers. And there's just only so long that that doesn't trickle through to everything. So you see it at the grocery store first and foremost, but then you're going to start to see it at restaurants and everywhere else. And so that's number one. Number two is used car prices, new car prices, just because it's such a big ticket item, to not be able to afford that's a big deal. And all of this really culminates. You're seeing in the stock market with investor fear. You've got the chart up right now. I think this is the most important thing. A little bit, I've been a little doom and gloom, but I think there's reason for optimism because the LikeFolio Fear Index, Investor Fear Index, has never been at higher levels than it is right now. And each of the last two times that we set records on this Investor Fear Index, the NASDAQ has rallied 58% and 159% respectively. So from here, a lot of times, like you guys talked about in the last segment, these fears get priced into a market before the reality hits. And now we're at a point where investor fear has never been higher. And will the reality actually culminate to that kind of worst case scenario that the market may be pricing in right now? Historically, these types of events have been very, very good buying opportunities for those who have the stomach for it and the risk appetite to handle the volatility associated.
Yeah, and that's kind of what the question I wanted to see, because this is almost like reflective of what we see in the VIX, right? Things spike when there's uncertainty in the markets. But do you think it's different this time, Andy, because some of the other data that you have, especially with sentiment concerns about gas prices going up, that's going to hit a lot of people's wallet, a majority of the U.S., where it might be different this time because you have inflation rising for the first time in decades, right? And that's not going to go away anytime soon, especially with crude oil at these levels, where maybe that spike won't do the the elevator up and the elevator down. We might have to see some consolidation here, or maybe an escalator down due to the fact that we haven't been in a rising inflationary environment in so long.
Yeah, I think you bring up a really good point. There is a difference here. It's not, so much a one-off event. Although when we were going into COVID, no one had any idea how long that would last and how impactful that could be. But I do think you're right. There is an inflationary aspect to this that makes it a little bit different. If it was purely a geopolitical event and purely based on the Russia-Ukraine situation, then I could say, I'd probably be pounding the table even harder that this is an opportunity. But the inflation concerns, you're right, aren't going away. I don't think that investors in Wall Street have a ton of confidence after a year of hearing inflation's transitory that the Federal Reserve is going to get it right all of a sudden. And so I think that all of those kind of culminate in perhaps a little bit longer of a fear-based market. But I do think that long-term, the engine of wealth creation is humming along really, really well, and I expect that to continue into the future.
And Andy, with the inflation fears chart that you had, the mentions count, you said 380% gain year over year. Is that going to probably be reflective that we might see some consolidation here, even though inflation is not going away for at least in the near term anyway?
Yeah, really what it is it's almost a gauge of how much inflation is outpacing expectations. I think that there was this feeling that there was some inflation coming and, things were going to get a little bit more expensive. But then once you start going to the gas station paying $3.80 or $4, or you start going to the grocery store and paying 2 or 3 times as much for beef or chicken than you're used to, then that really starts to freak you out as a consumer, and that's what we're seeing in that index. And it's a little bit scary for the average consumer, and it does make them pull back considerably on discretionary purchases that otherwise they might make.
All right, that's great data, Andy, and such a pertinent topic at this point with inflationary concerns across the board. Fed rate hikes coming, possibly, right? Hiking rates into an inflationary environment. We haven't been in that for a while, so could cause some more uncertainty here moving forward. All right, Andy, great stuff as always. Have a great day.
All right, thanks.
All right, that's Andy Swan, the co-founder of LikeFolio.com.